This video is for educational purposes only and is not financial advice. I am not a financial advisor. Investing involves risk, including loss of capital. Any tools or strategies mentioned do not guarantee profits or future results.
What if silver didn't just sit in your portfolio, but actually paid you every single month? That's the idea behind Tim Plaehn's silver dividend strategy. And it challenges one big problem with traditional investing. Because let's be honest, gold and silver are great for protection, but income? Almost zero. You can hold them for years and get nothing while you wait for prices to move. So Plaehn flips the approach. Instead of buying silver directly, he focuses on income-generating ETFs tied to silver companies. Here's why that matters. Silver demand is rising fast. It's used in solar panels, electric vehicles, and power grids because it's one of the most conductive metals on Earth. At the same time, supply isn't keeping up. That creates a strong case for long-term price growth. But again, growth alone doesn't pay your bills. So the strategy is simple. Use specialized ETFs that aim to generate monthly cash flow while still benefiting from silver's upside. In one example, a silver-focused income ETF moved from around 25 to 42, while also increasing its monthly payouts. That's the key idea. Income plus growth. Now zoom out. This isn't just about silver. It's part of Plaehn's broader service called ETF Income Maximizer. The goal? Turn dead assets into income-producing ones. Instead of holding investments that just sit there, you build a portfolio that actually pays you regularly. Here's how the service works. Every month, you get a new ETF idea focused on generating income. You also get access to a model portfolio, so you can see exactly how different ETFs fit together for steady cash flow. Plus ongoing updates, research reports, and educational content explaining how these ETFs actually generate income. So it's not just stock tips. It's a system. Now, the silver dividends pitch also includes a few bonus ideas. One report reveals Plaehn's top silver ETF, claiming yields up to 20% annually. Another shows how ETFs can generate income from big tech companies like Tesla or Amazon, even though they barely pay dividends. And there's even a strategy to create income from Bitcoin exposure without directly owning crypto. But here's the reality check. These high yields often come from complex ETF strategies like options-based income, which means, yes, you can get monthly payouts, but sometimes at the cost of limited upside or higher risk. So it's not free money. It's a trade-off. Now let's talk numbers. The service costs around 49 rupee equivalent for the first year, with a 365-day refund policy. That's unusually long and reduces the risk of trying it. But again, this is built for income investors, not traders, not people looking for quick gains, and definitely not passive set and forget without understanding the strategy. So, is silver dividends worth it? Here's the honest take. The idea itself is smart. Turning strong trends like silver into income streams instead of waiting for price appreciation makes sense. And income ETFs are growing fast for a reason, but the execution matters. You need to understand how these ETFs generate yield and what you're giving up in return, because high income often comes with hidden trade-offs. Still, if your goal is monthly cash flow, this approach is one of the more practical ways to do it. And if silver continues its demand surge, you're not just holding a metal anymore. You're getting paid while it moves.